Natural gas futures were up early Friday and headed toward a fourth consecutive day of gains as traders digested a bullish storage print, lighter production estimates, and a looming heatwave. After stabilizing around the $1.90 level, the market has regained momentum, breaking above a previous minor top at $2.10. The U.S. Energy Information Administration reported a storage increase of 21 billion cubic feet for the week ending August 2, 2024. This figure fell short of market expectations, which had predicted a build of 25 to 27 billion cubic feet. The lower-than-anticipated storage increase signals a tightening supply, which has provided support for the ongoing price recovery. The recent rise in natural gas futures has been fueled by bargain buying. Following a phase of selling pressure that drove prices down, traders are taking advantage of lower prices to make purchases. This activity has strengthened the market, aiding its recovery from the recent lows caused by worries about a possible economic downturn. Meanwhile, nat gas production has declined to approximately 100.6 billion cubic feet per day. National Weather Service predicts cooler temperatures across the northern U.S. through early next week, which could temporarily reduce demand. In addition, the remnants of Hurricane Debby are bringing heavy rain to the East Coast, potentially dampening short-term energy consumption. However, an anticipated heatwave may counterbalance these effects, leading to higher demand in the near term. European natural gas futures traded around an 8-month high of €40, set for a 9% weekly gain, driven by concerns over the stability of gas supplies after Ukrainian forces took control of the Sudzha gas transit station in Russia's Kursk region. Despite ongoing conflicts near this key transit point, Russian gas continues to flow through Ukraine, but with the transit agreement set to expire at the end of the year, any early disruption could have a major impact on Central European countries that rely on this supply. It could also influence the U.S. gas market, potentially driving prices much higher. Cheniere Energy expects to produce the first LNG at its Corpus Christi LNG expansion project in South Texas by the end of this year. The company also is planning to introduce natural gas to Train 1 in 2 months. Management said Thursday the company has energized the Train 1 liquefaction and utility substations and started regulatory filings in preparation for commissioning. The Stage 3 expansion project would add 7 trains and 10 million metric tons per year of capacity to the existing 15 million tons facility. All 7 trains are expected to be online by 2026. Cheniere expects to sanction the mid-scale Trains 8 and 9 project next year. Given the current market conditions, the outlook for natural gas prices remains bullish. Traders should keep an eye on the $2.30 level as the next potential resistance point, with additional gains likely if supportive factors persist. Gas futures are anticipated to face resistance at $2.15. If this level is surpassed with increased volume, it could pave the way for a test of the next minor high at $2.30. Failure to break through $2.15 would indicate renewed selling pressure, potentially driving prices back to a minor pivot at $2. Please like, subscribe, and comment to support the channel. See you in the next one.